are you, or where are some of your colleagues looking for alternative revenue streams, since they are getting pinched off by regulatory and other concerns?
But loan yield is an area that we've been looking at. It's if you look at the auto loan marketplace, it is so competitive, and 1.99%. There's no spread on auto loans. I think there's a market for unsecured lending that is more risky, so you have to price it properly and be a little bit more smart in how you approach that part of the portfolio. Mm-hmm. But with younger members are having a hard time getting loans, and I think credit unions, younger consumers, I should say, and I think credit unions can kind of fill that void. I forget what I was reading, but now more and more young adults are living with their parents after school instead of buying their own home. So I think there's going to be less opportunities for those first-time home buyers for credit unions. So I really do think there's some opportunities in that unsecured lending marketplace, whether it be a credit card or just a simple line of credit loan with a good interest rate, some sort of rewards type program. But I do think there is a marketplace out there for some unsecured lending. So to answer your question, it's really loan yield, investment yield, but credit unions are limited in what we can invest in. So a lot of it, unfortunately, is operational expense reduction. Mm-hmm. But technology helps that,
Right. And technology can be used, we've brought it up a couple times, it's not just a tactic, it's also a strategic tool as well.
Right.
And Tansley, you want to follow up on what you're hearing about what's keeping credit union executives up at night?
Yeah, I think, certainly all of the things that we've talked about are on that list. I think also figuring out what it is that they can stop doing, although I think credit unions tend to be, I think businesses in general, human beings tend to be sort of bad at this. But, yes. I think increasingly what I hear, credit union executives talking about is, we have so much to do. The regulatory burden continues to grow. We have so much on our plates, aren't sure how to keep up with everything. And so, I think one of the big strategic initiatives for credit unions to consider is, what is it we can stop doing? And that's a tough question because it's hard to give things up. But, I think to be able to be really excellent, the really good strategists are those that figure out what they're great at and focus there and let go of the things that they're just mediocre at or even just okay at.
Mm-hmm. Yeah, I like that because, you have 5 members still doing this thing and you're still doing it for those 5 members and it's not really serving the membership as a whole necessarily.
And it's hard, I think, to figure out who those voices are because you make an excellent point. And, again, having worked in a credit union, I've seen it happen where we, make a strategic decision to make a change and then we've got one very vocal member that comes in and then we go right back to doing it because, that voice was really loud. And, how do you figure out what those right voices are to hear and, really be focused on not only your current members but who it is that you want to serve in the long term.